Hey everyone, Ismail Kolia is your realtor, associate broker with eXp Realty. Today I'd like to talk about the differences between FHA mortgages as well as conventional mortgages. FHA mortgage is a government-backed mortgage product, and it is generally targeted or geared towards or ideal for folks who don't have a whole lot of down payment funds or who don't have excellent credit but still want to be able to buy a house. The government wants to encourage home ownership, and therefore the FHA product may be able to help someone with not a lot of money for down payment or not great credit. It can be used to buy a one family, two family, three or four family properties. It cannot be used to buy more than 4 units. It also cannot be used to purchase a co-op. Condos, sometimes you can buy with an FHA mortgage. We can talk to a lender regarding your particular scenario, but generally co-ops and 5+ unit properties are not financed through FHA. Second, FHA mortgage can only be used for properties that will be owner occupied, property that the buyer will be living there. It cannot be used for investment properties and so forth. What else? The down payment can be as little as 3.5%, although it doesn't have to be 3.5%. It could be more than 3.5%, but the minimum down payment can be as little as 3.5%. And that goes back to buying a house with as little money as possible. A couple of things to note with FHA mortgages is that there's an upfront mortgage insurance involved, as well as a MIP, mortgage insurance premium, which is paid every month. And that MIP can either go away after 11 years or after 30 years, depending on how much down payment one person has put on purchasing that property. So that's a little bit about FHA, ideally targeted towards people who don't have a lot of down payment or don't have excellent credit score, and they can put in as little as 3.5%. Key factor to remember is it has to be owner occupied, and it could be 1, 2, 3, or 4 family property. All right, what about conventional mortgages? With conventional mortgages, it doesn't have to be owner occupied. It could be an investment property, but there are more nuance to this than the FHA. For example, for owner occupied single family, the down payment can be as little as 3% based on income, or 5% if the income is higher than the threshold. Again, owner occupied single family, the down payment can be anywhere from 3 to 5%. Owner occupied two family, the down payment can be 15%, would have to be 15%. If the property is 3 or more units, then the down payment would have to be 25%. You would also need additional funds for closing costs, as well as reserve money for 6 months worth of mortgage payments as a precaution. The PMI, the mortgage insurance, the good news here is that the bad news here is that you need more down payment. You need 5% or 15% or 25%. Another good news is that it doesn't have to be owner occupied. It could be an investment property. Another good news is that you could use it for condos and co-ops and so forth. The bad news here is that you do have to have the higher down payment. One more piece of good news is that mortgage insurance doesn't have to stick around for those 11 years or 30 years. If you got a mortgage with less than 20% of down payment, your mortgage payment is going to have a mortgage insurance on it. But as soon as your equity in the house has reached 20% ownership, then that PMI, that mortgage insurance, goes away. So that's the good news for conventional mortgages. A lot of details, a lot of different factors involved, and there's no one short answer about hey, if I'm buying a house, how much can I put in? It really depends on who you are, how much you're putting down, what is your credit score like, what are you buying? Are you buying a condo, co-op, single family, multifamily? Why are you buying it? What are you going to do with it? Are you going to live there? Are you going to rent it out? So many different factors involved when it comes to a mortgage and what type of mortgage you can get, how much down you'll put, and so forth. For that reason, it's best to reach out to me. That way I can educate you further about your particular scenario. And also we can get on a phone call with a lender or two that I work with on a regular basis. My number is 914-215-1540, 914-215-1540. Ismail Kolia is your realtor, associate broker with eXp Realty. Thank you so much, and I'm looking forward to talking to you soon and working with you in the near future. Take care. Bye bye.